any of my charts up tonight. I mainly wanted to go through some of these plays and really just kind of tell you guys what I would be doing. Um,
Something I think all of us could benefit from. Do you think you could go over the process behind you picking the strike and why you picked certain strikes rather than the others?
Going over option picking essentially.
Also, if we could look at pins January 15th, the 75 call.
Uh, World, do I need to put my mic in or something? Is my mic kind of shitty sounding?
Somebody's mic is going off.
Sorry, I think that was me. I turned it on a second ago. I was going to ask if we could talk about the QQQJ from Stock Daddy like 2 or 3 weeks ago. It doesn't expire till like middle of June or July.
That one was
but
me.
It's down like 25%.
That one was me on that one. Yeah, no. If you guys could, I'm pretty sure I still have the push to talk on. If you can just, use that and keep your mics off to make this go smoother here. Let me get a few more plays. Anything you guys have lost on in the past week? Anything you're down on right now?
Yeah, I'm on HP call right now.
Yeah, I got that one.
Yeah.
Dropbox.
PBX. Was that
All right.
Palantir, PLTR.
What about Neo? I know they got January Neo Day coming up. I bought some calls for the 15th and 29th, and I held them a little too long, so they're in the trash now. Think they're gonna bounce back?
Tillio, can you look at Mara from Joe? I know a lot of people were down in the red on that one.
That's a put, right?
Yes, sir.
When does that expire?
1/15/21.
How much is it going for right now?
It averaging, I think it's 0.12 or 0.13 last time I checked today.
So the thing with Mara, and obviously I've seen that talked about a lot every time Bitcoin goes up. Obviously Mara is, and that thing just doesn't want to stop. And I don't think that Bitcoin does. I think they'll probably hit 31,000 before they pull back. If it was me personally, I would. I mean, the thing is, depending on how many contracts you have, you got $12 left in that if you only bought one. I don't know if it's worth cutting right now when you still have some time on it, because you could always get a nice drop if Bitcoin does finally pull back. Recoup some losses out of that.
What about Walgreens?
WBA. Is that one that Zaves alerted a while ago?
Yeah, I believe so. 115.
What is that? 115.42 strike call.
Correct. Yep.
All right.
Can we go over Dropbox as well and Snap?
Snap for February, I believe it is. 60 strike rate. All right. What else do we got?
How about Disney?
You win a play on Disney?
It was from Stock Daddy, I think. The 190 call.
190s.
Yeah.
They expire this week, right?
Mm-hmm.
I would ideally say definitely cut those. I mean, Disney did make a nice push today, but Disney's not a mover like that. It takes some news, like they had previously. Where did they close today? 177 or so?
I think so, around 177 or 176.
Yeah, I would go ahead and cut those just because they expire Thursday at the end of the day there. Well, right now, I mean, I really just wanted to go over what plays you guys are losing, just so I have a track record of them, and I can go back through and see where and when they were alerted, and what price and all that, and where they're at now, to make a list later on. As far as my plays right now, that's really all I can speak on. NVIDIA, those 550s, expiry this week here, the 31st. That one was, just trying to time that breakout there. As I mentioned in voice chat earlier, NVIDIA, PLTR, Amazon, all almost identical charts for the upside breakout. NVIDIA was one where I wish I would have just told you guys to sell it right here when I gave out some of those profit-taking alerts, depending on when you got in, that is. Me personally, I just trimmed some, but I kept getting back and back in that position. I was really just scalping it to finance the trade. I think I'm down. Let's see what I'm down right now on those. So I'm down 8,200 on those right now.
You're not alone, boss.
What's that?
You're not alone.
Yeah, so that was, just if anything, it's going to end up being a timing thing. The reason I'm still holding those is, I could sell out, get, I don't know, $1,100 back right now. But the thing with NVIDIA is when it does break out, that thing will move 20, $30 in a day. So I don't want to take $1,000 right now. If I can make some other trades, BLNK today, Ride today, Amazon, those long-term June calls that we were in that came back today. If I can use other trades to kind of fund that play right there, to make back some of those losses.
Up 48% already on that one.
So NVIDIA, that's just one of those breakout timing things. I'm going to be in that for.
Tillio, it looks like AMD and semiconductors in general, like they took a little hit today. But is that usually is it preparing for like a jump this week, like AMD, NVIDIA?
So today, a lot of the chips and the semis, a lot of upgrades on them. They did get some coverage today on CNBC as far as analysts being bullish on them going forward into 2021. So that's probably why you saw, and it happens all the time. Anytime you get one of these little mentions, you're going to get those FOMO buyers buying in that are just watching CNBC, and that's why you'll see an immediate dip right afterwards. Which, if you're watching CNBC, you can sometimes get some of these coverages. The Nigerians, they'll always go on, mention some unusual activity they're on. You'll see that ticker shoot up a little bit if it's call side. I mean, that's just like the AI alert bot there. You can scalp those real quick. Just make sure you sell. But that's why you saw midday today, a lot of these chips kind of had a nice push there. Sold right off afterwards. AMD at this point, I mean, you saw that big push. What was it, a couple weeks ago, up to 97 there when it broke all-time highs. I think that was just on a upgrade with them. But this is what stocks do. So anytime, and you saw it, Amazon's the perfect example. It happens all the time with Amazon. You see, just extremely range bound for a high mover like Amazon is. And that's what it's going to do when it's about to break out. So it needs to gain that strength. It needs to look for new buyers, dropping in price. That's what NVIDIA is doing right now. People weren't buying it at 525. You can look at the volume profile indicator on that one. You got about 524, 525, and then 520. That's where a lot of NVIDIA is traded at price wise. After that, it's 530. So they couldn't hold it at 525. 520 was next. After that, it's back down to like 517, 514, somewhere in that range when volume comes in. So right now, it's really just finding buyers at this point. But this is just what a lot of these tickers do. Some of the big movers, they need to gain that strength to push. AMD's doing it for 100, NVIDIA for 550, then 580, Amazon for 3,500. So NVIDIA, I mean, really the same setup I did when I alerted that Amazon play, playing the breakout. The only thing that I did with Amazon, obviously most couldn't took it, but got plenty of time, but went further out the money with a 4,000 strike. So, that could be the way to do it with NVIDIA as well. But the way I want to play NVIDIA, because premiums are cheaper, is just to keep rolling out, getting less time. Because once you time that breakout and it happens, like I said, that thing's going to push to 550, then 580. So it's really just a timing thing. But as for AMD, that's a January 15th expiry. People are asking me the day we got them, what do we do if, they're down right now? Anytime like that, and, whoever mentioned Ford there, you got to understand you're buying time on these contracts. You're not going to see, especially swinging, you're not going to see green immediately. You might get lucky and see that. But anytime you see me say, if it's a play I alert, building into a position here, going to buy more when it gets down, I'm expecting it to go down. Always pay heed to that, because I don't say for no reason, and I haven't taken an average on AMD yet. So when you say that, and the people that are doing it right, are the ones that are going to be making more money than I am. So when they buy in, when I take my average, now they're in cheap as hell, and that's what you should be doing. Especially if there's still time left on the contract. So let's say I alerted to take my average on AMD today, and people that weren't in yet saw that. They saw the first alert that I was going to average, and now they got their better entry here just by being patient. Chief Red Rum did that with the ride scalp today. He got in at $30 a contract there. That thing shot up to like $89. So, I think I made 25% on that. If you got in where I did, he made, nearly 300% or so. So that's one thing I was going to talk about here later as well. But um, like I said, Ford 2022, Ford's a slow mover. It's a nice cyclical play on the automotive industry, which is where money's going to go going forward. I think back into your finance stocks, your cyclical stocks, your value stocks, that entire sector. So I wanted some for the time and for the price at the money there on Ford. That's a good contract. Uh, Walmart, same thing there. Time on that one, ever since earnings, it was just kind of holding that support level, not doing much, gaining strength to push forward. I expect some news to come with them. Unfortunately, it was the wrong side of news with that whole investigation or whatever, but more related to holiday sales as far as their e-commerce kind of platform that they got going on now. But Walmart's really undervalued here. That's one of the value stocks that is trading well below where it should be trading. So that's just more exposure there with time going into 2021 with a value play. So Walmart, Ford value plays. Next is QQQJ. So that was a new one. If you go through, you can look at what makes up that. So I went through it. I looked at a lot of the stocks. We had a big rally in November. A little bit in December, and then we just kind of been sideways for a bit here. But if you go through the holdings of QQQJ, a lot of them haven't made their move yet. So that's what I'm playing there. And for 100 and some bucks to have until June, $5 out the money, $4 out the money, that's a good play there. So all I'm doing there is essentially playing laggards. Once they start pushing, QQQJ is going to start pushing. Dropbox, we got that till 115. Dropbox finally broke that 3-year downtrend that they were in for the longest time. So I wanted some exposure to that too. That's essentially a breakout play where it can really start running once it gains the strength too. And that's a good example on Dropbox too. So I think it would have been the same day. You would have needed to use day trade. But if you go back to my tab, those contracts, if you took it when I did, you filled at 120. If you waited a little bit because it did pull back, I think it went down to like $98 a contract. If you waited, got in there, that thing ended up pushing up to I think 148, 150 a contract when I made my first, you can take your profits here alert. So that's one thing you always got to mention. And of course, if you can't day trade, that's one big issue you're going to have in this market because it really is a day trader's market with this volatility. Dropbox, hell, you could have took profits there if you wanted to at 148, from 120. Essentially $30 a contract on that one. I never did, but if you did that, you could have got in lower again, if you wanted to go back into trade. So that's why it's always in this market, and I know it works. I do it myself, but small consistent gains, they're going to add up. If you're looking for 100%, 200% returns, you might hit some big trades, but I promise you long term it's not going to work out because you're going to keep trying to milk those trades as much as you can. Meanwhile, you can be taking those 10, 20, 30% profits and just slowly build your account long term. And that's the way to go about it. I wouldn't be saying it if it didn't work, but it does. So that was touching on a few things there with Dropbox as far as kind of doing that. And that reminded me today, someone, I guess he was playing Stock Daddy's watch list with Facebook. He was up 101% on a contract. You shouldn't be asking if you take profits on that or if you swing it, especially if it expires this Thursday. Obviously that just comes from a little bit of a lack of experience as far as, theta and understanding how all that works. But he either takes 100 and some percent profit, which is good for a day trade right there, or you swing it and then you got to weigh out the pros and cons. You're going to need that to essentially open up maybe $1-2 higher. And then he might have 150% return. So 50% extra. But if it opens flat or if it opens lower, he might wake up to 50% profits or break even on that. So you should never ask to take those profits. And I know a lot of people, they see what's going on in the the alerts tab or the success tab there, they see these big gains, people making money, but a lot of those people are waiting for those big plays to hit when they post in there. And I can almost guarantee you the majority of them are losing money at the same time on other trades looking for that. Next was FSLY, so another one we got till January. That closed above 103 for the longest time until they finally pushed it down. So I wanted exposure short term for the gap fill up to 120 there on that one. 103 really is the key level there, and then 107. So it was sending them higher highs, higher lows, and then we finally just I don't know if it was a downgrade. I read somewhere they might have got a downgrade. But that's just exposure to that gap fill because if we got that gap fill, which obviously I'm still in the contracts average down today, took my first average. That's one of those where if it makes that fill, and that would happen fast above 107 there, that could be 1,000% play on those. So really it's weighing out for Fastly. It's weighing out risk reward. And for that one, it was well worth it to get some exposure to that gap fill short term. Roll it out if you need to. Me, for example, I'm in 120 strike calls for 2023. So those are going to pay, but they're not going to pay as much as a short term contract would if we get that gap fill. So that's kind of how this market works at times. You need to have some exposure if you can afford to some of those high risk, high reward plays. Because one trade like that can put you in a good position overall in your portfolio. Let's see, Neo. Whoever mentioned Neo, what are you in on those?
I'm in 115 and 129 calls at about I think $48-$50.
For the strike price?
Yeah,
Does anyone know when their Neo day is coming up?
it's 1/8, January 8th.
1/8. So I feel pretty safe about that. I in fact I was looking at Neo today for a little bit. I had the channel drawn on them too, looking for that upside break pre-Neo day, but this could be another one here too where you're not getting that run up in anticipation of that event, and that could come next week leading into it, which I would say odds are 75% that it will. So I do like that one, and you got time on those. You might just need to take an average down. If you get a red day like today, that's definitely when you should be averaging on those. But I do think those will pay, especially with that event coming up. Whatever they're releasing as far as a battery and a possible sedan car. We went over Mara there that Joe alerted. Like I said, Bitcoin just keeps on running and running. Mara is going to keep on running and running. I mean, it just doesn't stop. WBA, I believe Zabes is still in that. That's kind of just been hovering last I checked that like 39.50 level, which I believe is right at the 23% fib level, 23.6. I'd have to check again. I haven't looked since last week. Snap 60 calls. We have until February on those. So that's another one there. It's been holding that 50 level since it broke above that. In fact, until today, I think. Let me go to that command and see where they're at. So it looks like they closed at 48.26 today. That was another one. It was holding that 50. That trend line was right there at 50 when we bought those. I still like that trade. I haven't even taken an average down on those. But same thing I'm looking for there is just for that to gain more strength. I mean, it was getting just all choppy up there, not moving at all, which is why I didn't take any average down. If you plan to average down like I do, you should be welcoming these kind of red days because now you get the same trade for much cheaper. And Snapchat, same thing. When it moves, it's going to move. It's one of them cheap stocks that essentially anyone can buy on Robinhood. I'm sure they would pump the shit out of it on Wall Street Bets or whatever it is there. That's one that can really, really move, just like it did. Early December here? I think it went from like $48 to 54 or something like that. So we take an average, and that's all we do is we get one of those pumps there and get out of those. But I like that contract still.
Tillio, that for Snap, it bounced off of that 48 level a couple of times this morning as well. So I mean that to me that was a pretty bullish indication that yeah, we had a little bit of red to see, but we're gonna see that next leg up relatively soon.
Yeah, and I think that was I think it was Trep asking me about it. I think that was the 50-day moving average, right? Around 48 there.
Yeah.
And next is the 46 level, which I believe is the 200-day on the 4-hour when I looked at that chart. But yeah, no, I do like Snap. In fact, let me see what those contracts are going for now.
I don't know. I still got some short puts out on Snap right now.
What's your strike on those?
49.
Okay, yeah, you're good then.
Yeah. We collected 1.2 credit on it, so I'm. Again, if worst comes to worst, we can always roll it out to next week, collect a little bit of more credit, keep rolling it out as long as we need to. I think if we drop down to the 46 level, that's or break down below that 46 level, that's when I'll take some concern. But until then, I think we're good to go.
Yeah, no, and I don't think it will. And I think if it does, it'll be extremely short term, and they'll buy it right off of 45 as well. Next was Disney, the 190 call from Stock Daddy. Yeah, I would cut that. Like I said, you're going to need a catalyst or something out of Disney for them to move like that. It just doesn't. Disney's not a fast mover like that. Besides what it did a few weeks ago when we traded those same days on them. So I would cut that. So yeah, I just wanted to get a list here on some of these plays, and then go into as far as following alerts. Does everyone here know, I mean, with their brokerage account they're using, how to enter and exit alerts, or does anyone need help with that? It's a lot easier asking and answering in here than it is trade floor with all the spam during the day.
I need some help for sure. I've actually been in this group for quite some time now, but I've just been so busy. I haven't really been able to really start trading, honestly. And I've done some research, looking through like the education programs and et cetera. And I think I'm comfortable enough with everything for me to actually make my first trade. But since I've never made my first trade, and since you just said that as much as you could tell me would be beneficial for me to make my first trade tomorrow.
So you kind of know the basics you said there?
Yeah, for the most part. I mean, it's still it's so much, but I think I get it for the most part to at least give it a pretty good shot tomorrow.
So let me just go over this quick, as far as kind of entering and exit alerts. And I mean, this might not apply to other analysts, but it's how kind of I move. Anyone that's been here knows that, I had to adapt with this market swinging. Like I said, the market's just not friendly to swing traders right now. You get that volatility. And unfortunately, when you're trading options, you're limited by time. So anytime you get those rapid movements, it's going to hurt your contracts. You lose more time. So me, and I'm going to probably start posting this every single day, just as a reminder. If you take any one of my trades, you better have a day trade available, because there's times when people have some good profits and they can't sell, because they're restricted. And that's more the reason to, if you're on Robinhood, take the time, set up a Webull account, TD Ameritrade account, Fidelity, E-Trade, whatever you like, set up a cash account with them. You're going to be so grateful you did that. And, it might take a little bit of getting used to the platform, but you're going to be able to take profit as much as you want. And you're not going to let grain trades go red because you have to swing them. So that's one problem I see here as well, is that people just don't want to take the time to do that. They don't like change, but all change is good. And you're not going to go wrong having unlimited day trade. So if you need any help doing that, Webull, TD Ameritrade, those are the most popular in here. So that goes on that. Next,
You're basically just saying just make sure I have multiple accounts, like one Webull, one Robinhood, and et cetera.
It is good to have multiple in case, because a lot of times you will have some issues. TDA doesn't happen too much on, as far as kind of any technical issues with it being down. Last time it happened was maybe 4 weeks ago or so. Robinhood, I know for a fact it happens a lot with them. But really the goal is to be able to not have a day trade restriction. So Robinhood, unfortunately, unless you're playing with $25,000, you're going to have that day trade restriction. But you set up a Webull cash account or a TD Ameritrade cash account, you can day trade as much as you want. The only thing is you got to wait overnight for your funds to clear from that day. So it's well worth it. I mean, there's absolutely no risk switching over and all the reward. So like I said, if you take my trades, just be prepared to sell them in the same day. That's kind of what I do. I look for those quick. Anytime usually I'm scalping, you guys will notice most of the time the trade's gonna either pull back a little bit, a couple bucks, the contract at least, and then go green. But that's what I'm looking for there. I'm just playing technical breaks where it's going to push in my direction, up or down. And, I'm going to get in, I'm going to take my 10%, 15%, 20% profit and get out of there. It's easy money, it's consistent money, and it adds up long term. And so speaking on the alerts as well, even for scalps. So let's just say BLNK today, 10 minutes into open, it was a 60 strike call. I mentioned in chat before I took that, we were watching that 54 level to break. It's going to push to 56. That's all we needed there. That one ran quick. It did I think it probably gave you an entry at most if you waited 2-3 minutes, 2.45 on that. But two things are going to happen. You're going to see the alert. It's already going to be up a decent amount. Don't chase it. There's no point in doing that. Just sit out and wait for the next one. Or if it comes back down like BLNK did today, just ask me if it's still a good entry there. And then you can get in cheaper. BLNK ran up, came back down, ran up again, essentially to the peak of the day it was on that contract. So don't chase it. There's a lot of times people will take, let's say I alert a SPY call at 60 cents per contract, so $60, and it runs up. It's at $70 now. I don't know what that is, maybe 15-20% profits. Just that $10 move right there. Don't chase it. You might only see a $10 premium, and I see that 15%, let's just say, in a matter of minutes, 10, 15 minutes or so at most. That's good. That's a good return on your money in that short amount of time. So chances are the time that you're buying, especially if it's at a nice percent return like that, I'm selling. So, just don't even chase those. Wait for the next scalp or next alert, whatever you want to do. But never pay the premium for any. I wouldn't even say pay the premium for swings because chances are you're going to get a lower entry. So wait for the next alert if it runs off. Don't get the FOMO. Don't chase it. There's always going to be more trades. And over trading in general, I mean, you shouldn't even be in every single alert. You're going to blow up your account doing that because you can't manage all those positions. Especially if you're new, you're not going to know your portfolio kind of balance as far as bullishness to bearishness. And I know for a fact, I'm sure everyone in here, I would say at least the majority, they probably don't even have any hedges. Say tomorrow is a big red day, all their bullish positions are just going to get smacked. You always need protection. I was going to go in over this later. But like I said, it's a volatile market. We're seeing these big swings overnight at times, even intraday swings. You always need a protection. So I'm bullish with everything going on. More stimulus, economic recovery, vaccines. Let's just say that they don't raise interest rates. I don't know what Powell was saying, 2023, 2024 now maybe. The lower the rates are, essentially the higher PE ratios can go. Even though some are just completely overblown right now, but that's what a low interest rate market's going to do. So bullish long term, but you need those protections. So me, for example, I was in SPY puts today. I cut those and I picked up VXX calls as it's at a nice support right here. Both are bearish positions in case of a red market. So it's hard to say how much you need to buy as far as how many contracts. But if you got a lot of bullish positions, you at least want to pick up some. I can always help if I see it in time. If you tag me, you can send me your portfolio. I can let you know what you need, or how many contracts you need to balance yourself out. So right now, let's just say that we have a big red day tomorrow. The VIX is going to spike. I'm probably going to be able to take 25 or so percent on my VXX calls. So obviously, I'm still probably going to be down on my bullish positions, but it's going to soften the blow. So it's just like car insurance. You pay the premium month to month to have it. You don't plan to use it, but if you ever get in a car crash, that money's not going to be out of your pocket. You're going to get covered from your insurance company. It might not cover the overall cost of the car or the cost to repair it, but it's going to help you out significantly. So it's always good to have. And ideally, you're going to be able to cash out both your hedges and your long-term calls down the road. So short-term bearish positions, long-term bullish positions. That's how I'd have my portfolio set up right now. But always have hedges. I don't want to see anyone, a day that we get a big red day, kind of complaining about being red overall. Because I try and emphasize it a lot that you always need that downside protection. Best case scenario, you trade smart and you're only in maybe 1 to 2 options trades ever, which is what I would say that's probably critical. I mean, I always say 5 to 7 maximum, but you're not going to go wrong with 1 to 2. Cash those out, get in some more. Over trading is going to blow your account up. The less positions you have, the more time and energy you can focus on each of them and working your way out of them. So that just kind of talks about hedging there, because I have noticed that's a problem. No one ever expects those red days. They always think stocks are going to go up. If you look at the VXX calls I mentioned, I think it was 2 weeks ago or so when trade formed. I think some people took those. They were, I think, in 1 week away
Thank you.
expiring, 18 strike calls.
Thanks. You too.
Yep. They did 300% return on those. So that was one of those times that your hedges are actually going to essentially make some of your bullish trades free. At least it did for me. So always have hedges. If you need help picking a hedge based on your portfolio, let me know how much you should put into it. But me, myself, I put VXX calls. It really all depends on the IV trading buy versus where VIX is trading at. If you're heavy in tech, QQQ puts, or if you're only in a couple positions, sometimes it's even better just to get some hedges on the same ticker. So went over that, went over kind of following alerts, not chasing alerts. Me, myself, how I'm going to trade, expect to take profits the same day if you ever take any of my trades. Even if I alert it as a swing, there's a chance, and it's happened many times, that we get 20% same day on a trade I alerted as a swing. I mean, you'd be foolish not to take that. That's a 20% return same day on your money. You can't get that at any bank. So at least have that day trade available. Get off Robinhood, or at least take the time, set up a cash account somewhere else, just for kind of scalping and day trading. What else here? Stopping
What
out.
is
Excuse me.
Yeah.
Oh, go ahead, man.
Whoever, one of you can go.
Okay, I guess I'll go. What is the sorry, I'm gonna probably just talk your ear off, but what is the
That's
as I
fine.
look in the tabs, and where exactly, like, say if I'm gonna trade tomorrow for the first time, and I'm looking for what you were saying, where do you put your alerts, I guess? Is that gonna be in the alert tab, or would you where exact tab would you usually
So
use?
under, you see where options alerts are?
Um, no, I don't.
It's towards the top. You'll see
Matches,
Tillio, Stock Daddy Joe, Zabes, MMA.
matches blind. Oh yeah. Okay. Oh,
So
gotcha.
you'll either find them in the blue Tillio tab, where I'll alert mine,
Okay.
or in the lottery trades tab. If I'm buying a contract that has a lot of time, these are called leaps. They're usually a year plus until expiration. It's going to be in the option leaps tab. That's under
Okay.
long-term alerts.
Okay.
Anytime I post shares that I'm buying and swinging, it's going to be above that in Tillio share swings.
Okay.
So the difference in me posting in my tab versus lottery trades tab, really I've been making more use out of the lottery trades tab, just because I've seen a problem with people going heavy into trades, thinking every single one hits, so they blow their account up on that one losing trade. So if you guys can't help yourself from blowing up your account by just YOLOing everything into one trade, I'm going to do my best to do that. And I've noticed putting it in lottery trades, it's going to make people either less likely to go heavy into it or less likely to take it at all. So that's a nice little tool I found. If you notice, a lot of them have been hitting. There's probably at least an 85% win rate in there. And that's because they're not all lotteries, but when I put them in there, it's going to make people think twice about just going crazy into one trade. So obviously next alert I put in there, don't go heavy just because I said that. But just kind of something I've been doing because I've noticed it's been working. So that's where you'll find my trades at. But Tillio, lottery trades or options leaps, and then shares will be in the Tillio share swings.
Excuse me. What did you mean by hedges?
So, obviously right now I'm bullish overall. I'm bullish going into 2021. We are going to have some pullbacks. But I'm going to assume right now that most people in here are probably all in bullish positions. So, you need some green market to make your trades kind of play out there. What happens on a red day? Everything's down. We get some news overnight, which is more likely to happen than anything. The market's reacting a lot to news right now. If we get that one big red day, really everything's going to be drugged down. You might have some individual winners, but most equities are going to get brought down overall. So if you don't have any hedges, which all a hedge is, it's let's say you're in a bunch of calls, you're bullish overall. So let's just say that we get one bad news piece, the SPY's down, 500 points. We saw that last week on Monday morning. That was just out of the S&P 500. Rebalancing was the reason we were down so much there. But I believe that was like an 8-point drop on the SPY. So you need to have that downside protection for when those red days come, because they are going to come. We're not just going to keep going up and up. So let's just say, for example, let's just say all January expiration, I'm in BA calls, I'm in NVIDIA calls, AMD calls, Snap calls, and that's all I'm in. We get one big red day, every single one of those positions, more than likely, you're going to be red in the morning on that red day. So the best thing I can do there to protect for those red days is pick up some SPY puts. So what I like to do is I just keep rolling out. Anytime I take a hedge, I roll it out. So if I'm taking SPY puts, they'll be short term. They'll either be weekly expiration or 1 week away expiration. Because like I said, long term I'm bullish, but we're going to have some pullbacks. So that SPY put, let's just say Monday, for example, SPY went from, 368, opened at like 362 or so. If you had some SPY puts for that, you cashed out pretty big depending on how many contracts you got, because that's a big ass move. And that would have made a lot of those positions I just mentioned essentially for free. You probably were looking at, 5, 6, 700% returns if you had SPY puts for that. So that's essentially what it is. It's just protection for the downside. And I mean, it works the same way on the upside. So back in March, we kept on dropping. Obviously the trend was down. We were still selling off over COVID fears. So my hedges back then were calls. I was in bearish positions because we were going to keep dropping more, but we kept getting those bounces back up. And I kept on cashing out those hedges. The difference there is that hedges were for the upside. So those were bullish hedges while I was maintaining a bearish overall position. The beauty of back in March was we were seeing 1,000-point intraday move. So you literally could have known nothing about trading, picked up SPY calls, SPY puts all in the same day, cashed them both out the same day. Obviously, we still have some volatility, but we don't have those wild swings intraday. So that's all it is. Like I mentioned, it's essentially car insurance. You drive a car, you pay for insurance. You don't want to use it, but you need to pay that premium just for that protection. Because worst case scenario, you crash your car, that insurance is going to soften the blow as far as expenses go. Same way a hedge works. So it's just balancing out your portfolio as far as bullish to bearish weight. If that helps answer your question.
Yeah, that was very well said. Thank you.
Yep.
What is so for tomorrow, I know you said you should always be mindful of like how many times you go in, like how many different contracts that you have. So if it's my first day tomorrow, how many would you recommend that I would get into? Like maybe like 1 or 2?
So here's what I say to everyone. And I'm sure only half of them listen, but This is how I do it myself. I go into every single trade expecting to lose that money. So most people, and these are the people that hold 100% profits and ask if they should take it. I look at the risk before I look at the reward, and that's the way you got to approach the market because it's not friendly, it's not your friend, and it's there to take your money. 5% of people that trade stocks, trade options, make money. So the edge is already against you there. So I tell people exactly what I do. I go into every trade as far as what I'm okay losing 100% of. So, let's just say I alert a call that cost $100. If you got a bigger account and you want to put, get 5 contracts, you're 100% okay losing $500. You go into that trade thinking you're going to lose $500. If that trade goes against us, obviously you're not going to lose 100% because you're going to use a stop loss, maybe 30%, 40%. But so you go in there thinking you're going to lose. So if it is a bad trade and it goes against you, like I said, you're not going to lose all that money, but you were prepared to lose all that money. And now any profits you get are going to feel a little bit better because you went in there with the mindset that you weren't going to be leaving with any profit regardless. So that's how I approach every single trade as far as how many I buy. Let's say, I don't know, let's say,
Okay.
what's a recent one we took? Let's say, what is it? So in the lottery tab, and I don't think I posted this play, I just mentioned it in trade floor. This was last week. That's when we got this is when we had the news on Apple as far as entering the EV sector, whatever they were talking about doing. Obviously that's going to move the stock. You saw the first initial pop when that news came out. You didn't see an initial sell off. So towards the end of the day there, I wanted to swing some calls. They were Apple 130 December 24th expiry calls. They were going for $77 when we got them. So I was pretty confident we were going to go up, but I was planning on swinging, and this was a weekly expiration contract. So Theta was going to eat away at it. We essentially needed to gap up. Luckily, Apple gapped up. And we made some good money, but I went in there. I only bought one contract, $77. I was completely okay with losing $77 on that. And worst comes to worst, we didn't gap up the next day, and I probably took a 50% loss on those, got like $35 back. But Apple gapped up those contracts, got out of those for 246, so 217% returns on those. But that's one there. I went in there. I knew the risk. I was going to be swinging it. It expired that week. Lose $77 or make a good return. Ended up making a good return. So that's kind of how I would do it. And that's just, I guess, if you're just starting to look at it that way and build that into your mind too. 80% of trading is psychological, I would say. Now that can always change as well. Let's say that you had a good week. Let's say you have a $5,000 portfolio and you're up $500 on the week. Me, if I could give any advice, it would be to stop trading if you're up $500. I've seen too many people go into a Friday saying that they are, up $300 on the week. End of the day, they took more trades. They wanted to gamble with some profits. Now they're down overall in the week. I don't know what stopped them from just not trading anymore there, locking in those gains. $300 a week, multiply that by 52. Those are some good returns for the year, some nice passive income. So that's another time where I think how many you buy should change. So $500 you're up for the week, you're going into Friday, and you still got a decent sized portfolio to take some trades. Let's say I alert a trade that's cost $50. I don't see why you don't just buy one, because if that trade goes to zero, you still close the week out up 450. So there's a whole bunch of things you can do to kind of expand your chances of ending the year overall on the green. It comes down to not going heavy into trades. If you had a good week, if you had a good day, you either stop trading or you only play with a fraction of the profit. So one thing I'll do some weeks is, and I did it I think last week or 2 weeks ago when I was in some Amazon swings that I think they paid me out like 10K Monday morning. I only took every single trade I took that week. I only bought one contract because I was only playing with profits. If it was me, I wouldn't have traded at all. I was content for the week there. But look at it that way too. If you have some good returns for the week or for the day, go lighter in the trades. Anytime you have good profits, don't play with all them profits. You should only play with, if you want to, maybe 10% of the profits, because you're still going to end up with, some good returns overall for that week. So a lot of people, they just don't know when to hit the gas or the brakes. They just want to keep getting in trades, and they end up giving up all profits that they had for that week or that month or whatever it may be. So like I said, trading's 80% psychological. A lot of these things, to me, it's all common sense, but the human brain is kind of crazy how it works, and it's hard to tweak that. But it's just a lot of mental things that only you yourself can do as far as to better your trading. It comes down to emotions, to greed. Um, those are really the top two that I would say. And that's one issue I'm seeing in here as well, is people just, they don't know when to quit when they're up, and they don't know when to call it a loss when they're down. So that was the next thing I was going to mention too, was using stop losses. So someone in voice chat today, they were down, 80 some percent on, I forget which ticker it was, Beyond, I think, or Roku. Actually, they were in some Roku puts. Ideally, you never let yourself get down to 80%. Me, I do it all the time, but that's just how I trade, because I've seen 80% loss turn into 100% profit in no time with the volatility that we see. So an ideal stop loss really depends on the time you have. Let's say you have 115 contracts. If you're going to stop out of something that say has 3 weeks of time, I would probably do it at 45 to 50%. If you're going to average down something that has 3 weeks of time, I'd probably say do it at 60 to 70%. So you either do one or the other. You take an average at 60 to 70% with 3 weeks of time, or you stop out at 40 to 50% with 3 weeks of time. A lot of people I've noticed, depending on how much time they have, they're stopping out way too early. Let's just say that those QQQJ calls for June. Right now they're down 25%. If people are stopping out of that, then they're doing something wrong, because that has January, February, March, April, May. What's that? 5-6 months of time on them, and they're stopping out at 25%. Something like this, I would love for it to bleed more, get down to 50% loss, where I would take my first average with that much time. 50% on that versus 60% on something else that I mentioned with 3 weeks of time. That's just because if you can get 50% down on something that still has 5 months of time, that's when you want to take your average. If you have less time on it, ideally you want it to bleed a little bit more before you take your average. And that's like AMD, for example, right now. Everyone's been asking me, all week, should we take our average? Should we take our average? So that thing's done absolutely nothing. We could have took one average, and then we just got premium burnt. Theta's just eating those away. So whoever I told in voice chat today, I want to see it break ideally like $94 for the upside move right there, which would happen around $94. So I'll pay the premium to get that average just for that extra confirmation. So where it would differ is, I would say scalps. Scalps, your intentions are really to get in and get out with green kind of instantly, a couple minutes, maybe at most an hour long. That's ideally where you want to keep a tight stop loss. So let's just say that, when I posted in my pin messages, I posted this, I don't know, 1-2 weeks ago. So I'm looking at this one right now. I have green ovals kind of highlighted here. So let's say you see it breaking that 225.37 level right there, and you want to hop in puts. So if everyone's looking at this in my pin messages tab from 1218, just looking at the chart of BA where I have the kind of green and red ovals, you see the 225.37 price level I have You see that candle right there, break that level. Let's just say you wanted to hop in early with some puts. You see the next candle after that big red one below that price level. That one also closed below that level. But then you got caught in a reversal and it bounced back up. So if I was playing puts right there on that first break, got in, I probably would have had a 10-15% stop loss. So that stop loss would have triggered. Now I just continue to watch it. And then you see it broke it again. And this time when it tried to regain that level, 225.37, it couldn't do it. It tried it 1, 2, 3, 4, 5 times and couldn't break it. That would be all the confirmation I need to see, okay, it doesn't have the strength now to break back up. I would hop back in some puts there and play it down to my next price target of 224.40. So if you're looking at this, I stopped out at say 10% on that first time where I got caught in a reversal. Maybe I lost. I posted the price of the contracts on there somewhere, but maybe I lost, let's say $10. Get back in on the green. So right now, overall on BA for the day, scalping it, I'm down $10. Get back in on the green right there where I see it's not breaking up, and I'm going to scalp it down essentially $1 to 224.40. I would have hopped back in right there, and I probably would have made, I'd say, I don't know, $40 on that quick $1 scalp. Now I'm net positive $30 on that trade. So for scalping, that's
Yo, boss, do you by any chance think that Tesla's going to hit 700 or surpass it?
yeah, I think it will. I think that's what it's doing right now after it broke. I mean, I haven't looked at it. I looked at it today for a bit, but I think 650 or so, 655 maybe was the level to break for that push to 695, then 700.
Random question, if you don't mind. How often do you actually exercise your right on call options to buy 100 shares?
It really all depends if I want to actually own the stock. I really only do that on stocks that I want to own. So Apple, for example, I think I was in from a while ago when they were like 106. I picked up some in the money 100 strike 2022 calls. So obviously those I'm going to exercise. Next one, I'm in some 2023 PLTR 40 strike calls. I'm going to plan to exercise them as well. My hope is that PLTR is probably at $70, if not more by then. I think there's a couple other ones that I have in my other account, but it's only if I want to own the actual company. I don't do it just to flip money. If anything, I wouldn't even enter in the money positions then. I only enter in the money with a high delta if I actually plan to buy the shares. That's the main goal there. And whoever I talked to in voice chat earlier today, I said sometimes it's better to pick up some in the money contracts with time that you plan to exercise than picking up 100 shares. So you might make more if the delta is high enough owning one contract of that in the money contract than if you were to pick up 100 shares if you're expecting that push in either direction. So that one's a little more in depth on how to go about doing that, but really the main thing I look for is obviously if I want to own the stock, at what price I want to own it, and then what the delta is looking like on some of the contracts. Does it make more sense for me to pick up one contract in the money, or does it make more sense for me to buy 100 shares? So hopefully that answers your question. Yeah, really, if I want to actually own the shares and invest in them long term. But back to stop losses. So swings, yeah, depending on your time, 40%, 50%, stop out somewhere around there. If you have more time, you want to definitely stop out a little bit further. I mean, or you don't even have to. If you don't like the trade, you want to be in it, you want to free up some cash, stop out early. That's up to you. Scalping, keep a tighter stop loss because, like I said, ideally you want those trades to almost turn green instantly if you're scalping it the right way. So it's better to cut it 10% and then reevaluate the trade and either play the upside break or the downside break, just like BA here in this example. You would have took that 10% loss, waited for a better setup. You got that about 20 minutes later. And now you probably just made $40 on that next scalp, down $1 to 224.40. So you lost about $10. You made about 40, so you're net positive 30. So scalping, keep a tighter stop loss on. That's usually kind of the way you want to go. Now, a lot of people, I think, especially for swings, is they're stopping out way too early. So and that's why I always say a stop loss. It's really it can help you and it can hurt you. I think there's a lot of people in here that are probably stopping out of their entire account. If they're stopping out at 10 to 15%, you're never going to let the trade play out. If you have time on the contracts, you're going to stop out at 10%. Next thing you know, that trade would have been up 50%. So you need to have it at the right kind of stop amount. Don't cut it too short unless you're scalping, and obviously don't stop out at 90%. At that point, you might as well just let the contract go worthless if it's going to. Roll the dice and see if it's going to make you back some losses. But you do want to stop losses. You never just want to let a contract bleed to being down 99%. Unless you take a trade that you know is 100% a lotto, maybe it's an earnings play, and you go in there knowing it's extremely high risk. It's either going to go worthless or make a lot of money. So far we went over some things: following alerts, not chasing them. You can always wait for a better entry, hedging, stopping out of trades, kind of portfolio sizing.
Hey, back to hedging real quick. When you say you roll over your hedges, do you just mean like you're selling the contract and then buying it again to hedge over your next calls that you're making? And then also that DPW call that you guys put out, like, yo, how did that come about? Was that something that you guys were following prior to the contract, or did you catch an article like that morning and you were able to like move fast, or
So that was
how did that research come about?
what did those? That was actually Stock Daddy. What do those contracts do, percent wise?
I went like 120%, but I got out. It kept on going. I think it's even now overnight. That's another thing. I missed out on. I took out the day off early after some profits. I quit for the rest of the day, but I wanted to get back into a call to see how I was going to go, but I didn't see really anybody talking about it, and I wasn't sure. So that's what I'm talking about. Like, where would he know to like, all right, how much higher is it going to go based off this contract? It was at $4, it shot to like $5.50. Is he planning for it to go to $7? Where does that come into? You know what I'm saying?
Yeah. So as far as that one, I will say I don't know where Stock Daddy gets it from. But he has a tendency to find them cheap ass contracts that can do a couple 100% return. So I would say definitely don't sleep on his tab there. He's looking out for the small portfolios. There's been many trades I've seen that he takes that are below $100 that do a couple 100% return. He might have some nice screener that he uses that's based off average volume, the percent it's up for the day. He might have some patterns set up in that screener. So he might have a screener. He might just have some good news sources pulled up, blogs possibly. But I will say, yeah, he is good at finding those cheap plays that print. As far as when to take profits, I'd have to look at their chart to see where a good place would be to take profits.
Talking about more like re-entering now, but
as far as
yeah, I
re-entering,
get you.
I mean, let me pull up their chart in the tab here just to see.
Could we have a different quantum scape? That'd be something.
Well, it looks like it spiked late November, hell, from I don't know $3 up to $9 or so. It looks like he might have just caught it off of that trend there around $4. As far as I can say, I mean, and I don't have my Thinkorswim charts up, but I will say it does look like it hit resistance. I don't know what that level would be there, 550 maybe or so. So obviously you want to set some support and resistance levels. That always helps when you're looking to take profits. I'll do that on scalping. That's why I give multiple price targets in my watch list. They're not always going to hit there, but it gives you an idea of when you're going to run into some trouble, where buyers are going to have a hard time or sellers are going to have a hard time. So, but shit, anytime you're up 100% on a quick trade like that, I would just take the money and walk away. I wouldn't even want to. Yeah, I wouldn't even want to look at re-entering. I would just, at that point, you just got to learn when to walk away, move on to the next trade. If you want to go back in with some, okay, it looks like they got a big government contract. If you want to
Yeah, well,
look at,
that's what I mean. Like the 1.1 mil contract, I think. Like I remember a couple of months ago when QuantumScape talked about it, there were those contracts were coming super cheap, and now they're like, you know, $700, $600. You know, they're a lot more now. So is this something that you think we could ride like that? I guess is what I meant with the big contract. You know, not so much as like when it comes to knowing when to take profits during scalping. It's just seeing that next company pop and knowing how long to ride it for.
Well, what expiration did he alert?
I think Friday, I think Thursday. I mean, I'm not really sure, to be honest with you. You know, I
So
don't remember.
here's
But
what
I
I
can go
will.
back and look at my history.
Here's what I was always, doing, and this is smart for any trade too. If you still want exposure to that, if you think it could be another QS and run, then the key is definitely only play with a fraction of your profits from the first round. So, let's say you made 100%. What was that? $60, $70 or something?
I got like 5 contracts. Let me see. Yeah, all in all, it totaled out like it was like $120, $130. Doing a quick like 5 minutes, and then it jumped back, came back down, jumped back up. I scalped it a couple times, but it was like, man, is this thing gonna keep shooting up to end up being like $9 in a week or two, or $10 in a week or two?
And I mean, it very well could. It could pop right back up to that upper trend line it's got there around $10. What I would do is if you made $120 or so off that first round, I would get plenty of time. I'd go further out the money. I can't see contracts right now, but play with a fraction of the profit. So you made $120. Let's say that you can find a contract that expires in January. Maybe this is another QS and it's going to pop like that. Get a January 15 expiry, maybe put, I don't know, $60. Look for a contract that's reasonable, not too far out the money, and only cost you $60. So now you have exposure to possibly another big pop like that can do, 1,000, 2,000% returns. Worst comes to worst, you lose on that trade, maybe you stop out of it, but even if it goes worthless, you still made $60 overall on DPW. And like you said too, as well, you took profits, got back in, scalped it, took profits again. That's another thing that people should start doing here. If you see a contract that it's moving a lot of volatility, take profits, get back in cheaper. Don't just keep watching it go from red to green or from big green to small green, big green to small green. Capitalize on that. And some people have been doing it. When I mentioned that a lot. Especially if it's got time on the contracts, or even if it doesn't have time, take advantage of that volatility. Some people are, they're in a trade and they're waiting for it to hit a certain percent return. But in the meantime, some people have saw the fluctuations, in the spread there, and they scalped it maybe 5 times, and now they're already out with what essentially is, what the other person would have got holding off for 100% returns or so.
Yeah,
but
you could scalp $60 5 times, and today was actually my first day in the Discord trading with you guys, and it was very interesting, I must say. So I'm excited to keep on going with you guys.
Yeah, well, you will notice it gets pretty goddamn hectic in here, especially during the day.
A little bit. It's
But
hard to keep track. It's kind of try to figure out how to like mute out all the noise and just try to follow you guys and see what you guys are doing while I'm still doing my own thing. You know what I'm saying?
yeah, and I mean that, I've tried working on that, not to block anyone out, in trade floor. It does get crazy in there. That's why I made the advanced trade floor. Everyone still has access to see what's going on in advanced trade floor, but obviously we have a quiz to get in there for written access. You need to know a little bit, and the main goal was for that not to be spam related, strictly trading related, no bullshit. And even if you don't have access to that to write in there, you can still see what's going on. But I am obviously still figuring out a system to, rather than putting on a 4-hour timer on trade floor, just to quit the spam in there, just because I like to answer every single question. But by the time one person asks me a question, there's 500 more messages that come through that minute. So I got to bury through chat just to find them. But yeah, to answer your
And then
question,
we're like, wait, whose answer did he answer? Whose question did he answer right now? And you're trying to figure it out. You know what I'm saying?
But no, to answer your question there, that's what I would do. If you want some more exposure to that trade, if you think it's going to make a move like QS did, you know, you have 120 profit to play with from that one ticker alone. Get more time, go further out the money, spend $60 or less. So regardless, you're still leaving with $60 overall on DPW if that goes worthless. And that's what you should do with any single trade that you want some exposure in. If you're in some shorter term positions, take the profits and just roll out further with some of the profits. So, cash out the short term, roll out to a longer term expiration, further out the money. That's only going to cost you a fraction of the profits. You're not going to lose that way. Just like you're not going to lose taking profits and walking away. It's really, there's just so much to trading as far as, I gave a decent analogy, I think, on how to approach it. Obviously, the market's against you, the odds are not in your favor. But there's so many damn things you can do to increase those odds to make it in your favor, to make your odds go from 30% probability of success to 70%. So that comes from one, taking small, consistent gains long term. Two, what I just mentioned to you, if you made some profits, if you want more exposure, play with a fraction of those profits. Hedging, obviously, averaging down at the right time, that is, not just taking a careless average. That's not going to help your position out. Stop trading for the week if you make some decent profits. Even stop trading for the week if it's a bad week. There's a lot you can do to increase your odds rather than just buying and selling. There's a lot of cool tips and tricks that you can really do. You can study the option chain all day, look for a contract that is extremely undervalued, whether, maybe there's no demand in it yet or the market makers just have it priced weird. A whole bunch you can do to increase your odds in the market.
Hey man.
Really, a quick question regarding like stopping out. Because I agree with you. I've definitely seen situations where, you're down way more than the conventional 20%, 30, 50, 80%, and it comes back. So I wanted to ask in terms of like SPY, I noticed that you usually have it on your watch list. When you don't, is it because you're unsure of what the price action might be that day, or you're just not looking at it that day, so you leave it out?
No, sometimes, I'm always, I always got the SPY up. I got the VIX up all the time. I got futures up all the time. The NASDAQ up just to kind of see what some of these indexes and futures are doing. But sometimes I just add other equities, no ETFs, and I just leave the SPY out. It's not because I'm not looking at it or anything, or I don't think there can be plays made, but I just go to where I think there could be a bigger move. So we saw today, for example, the SPY gapped up obviously on stimulus news. So I wasn't expecting much out of it today as far as scalping. I figured it was going to be fairly range bound all day, which I believe after maybe the first 30 minutes it was. So there wasn't a lot of opportunity there. It was really looking for the ones that opened up red today while the majority of the market's green, looking for opportunities there, or for some that opened up big green that might have some downside. So that was really my reasoning today, at least, not to include the SPY, was I just didn't expect much out of it today after that gap up.
Okay, so I kind of felt the same, and I had some 368 calls expiring on the 30th that I bought on the 18th. So I swung them through that weekend, hoping that there'd be, because I was anticipating it, the stimulus going through on Tuesday. The market kind of reacted funny to it. SPY went down,
Yeah,
and
Monday hit you
then
hard a bit, huh?
yeah, exactly. And then but kind of like your approach, I was willing to lose the whole thing. Then it came to Christmas Eve, markets closing early, and I was like, all right, you know what? Like I'm down 1,500. All right, I'll just take it. To then come in today and see, and the other thing too, I was thinking about theta, like Carl has been saying a lot, because of those days in between. I was like, you know what? Let me just get out here. And now come today to where it goes into 373, it's up $2 premium from where I sold it. I would have been well into profits, and I kind of had that feeling, that sentiment, like, did I get out too early? I mean, today being the 28th, should I have at least held it till the Monday because of the way SPY works, or what are your thoughts on that?
Yeah, and see, obviously, that's always a bad feeling, and that's why, for example, right now, I'm down whatever $8,300 or so on Nvidia. I can cash out now for $1,000. I know the breakout's coming. Could it come this week? Absolutely. Are the odds in my favor? Absolutely not. But to me, it's one of those where I'd rather take the risk of just throwing that money away for that possible, $20,000-$50,000 payday if it really does break out this week. In the meantime, I'm working on other trades to make up for that loss on Nvidia alone. So I think you did the right thing because you knew that contract expired this Wednesday. You had half a day Thursday, all day Friday, Saturday, and Sunday of theta to eat away at that. You would have needed what happened today, which I wouldn't say the odds were good of that, especially after the rhetoric from Trump that he wants $2,000 checks or he's not signing, and then he even said again he's not signing. So I think he got a little bit of a push from the Republicans to sign, especially with the runoffs in Georgia right now. But I would say the odds were, I don't want to say low of that happening, but they definitely weren't in your favor. So I think you did the smart thing there. Obviously, the whole S&P 500 reshuffling Monday morning and the big sell-off it had didn't help those contracts at all. The only thing I would have did differently was on Monday, whatever date that was. What was it, the 20th or so on Monday?
Yeah.
You could have maybe have averaged those down when SPY was at 360 or so, 361, wherever it was Monday. And going into, which wouldn't have helped, your swing case there, because like I said, you would have needed a gap up today. But 77% of the time, going into the new year, it's ideally, I don't want to call it the Santa rally or whatever, because I think we saw that early this year, especially in November. But ideally, you have a little more green than you have red overall. So I don't think you made a mistake at all. That's just what I would have done. I would have took advantage on that big red day on Monday and just got an average. I'm sure you were down quite a bit on those if you got them on the 18th.
Yeah, I did average down, and it kind of felt like it wasn't enough, but that sentiment that you do agree kind of makes me feel better about it, because I felt stupid today, seeing it gap up the way that it did. Like, did I not have the foresight to see the gap up, or was I overly conservative getting out on Christmas Eve?
No, yeah, like I said, I mean, 3.5 day weekend of theta, you would have needed that gap up. So you would have you needed all the stars to align for that to play out. So probability was low on that happening. So I think he did the right thing there. And it just so happened that that slim chance of something good happening ended up happening. I mean, that's happened to me so many times. And the majority of the times it's on Tesla. I'll cut for a couple $1,000 loss. Next thing I know, a day or two later, those contracts are up 10,000 profit or so. Usually around some news like they're finally going to be in the S&P 500, anything like that. So it happens to me all the time. But like I said, you always got to look at risk before reward.
All right. Thank you, man.
I think someone else had a question before that they were about to say.
Yeah. Speaking of knowing when to walk away, what's your take on microvision? Have you looked at it lately?
What's that ticker?
It's not an option trade. I own stocks.
MVIS, is it?
Oh yeah, it's MVIS.
You own shares of that?
Yeah, I got around 2,300 something.
Where'd you pick them up at?
It was 695.
Okay, so you're down a little bit now. So, I mean, that's one, you own the shares. I don't know much about the company. Obviously, there was some type of catalyst mid-December here that sent it up like 300%. What do they do exactly?
I think it's a company like for radar scanners that people use in cars like Tesla and stuff in the future probably. And I think the U.S. military use it too. Like it kind of scans everything in the room. Like if it's in the car, probably if there's like a hole or anything in the street, probably is gonna spot it before like a regular human being would.
Okay. Yeah, so I
Yeah.
mean, if that's the case, it's essentially a speculative play, but it's a future spec play. So you kind of got to see where we're going here. And as long as this is a good company, you say they might have government contracts, something like that. I think that's something where it's worth owning the shares. This could be, this could do 500% in the next year or so, if they get government contracts or something like that. So you're in shares, you're not going to lose that way. The only thing that you should be doing is buying more. Obviously, don't buy more at 671 or wherever they're at right now. If it bleeds a little bit more, maybe fills that gap to the downside, that's when I would pick up some more shares. But I think that's a good speculative play based on kind of where we're going to be heading in the future.
Yeah. I wasn't counting on actually keeping them for a long time. I did have almost 1400 profit today, but I didn't want to take it and I went down, and that was the second time. So should I just, take maybe 1K, 2K profit and then get out, or should I just keep staying at least for another week? But I wouldn't want to hold for
Are you
more than
still
a
up
week.
on them?
Yeah, I am. I'm not up now. I think 20 or 300 down, but pretty sure tomorrow is gonna go over 7 again.
Yes,
So
so
it could be up.
that's where I hate to say, and I do it all the time for people that take my trades that gave profit and then they want to ask if they should cut for a loss. If you weren't planning to be in there long, I would definitely have just taken that $1,400 profit. You essentially got what you wanted out of it. I think that I don't want to say greedy, but you were more fearful that it was going to keep running and you could have made more. But, you went in there, you always need to have an entry and exit strategy. So your main goal was to go in there for a quick flip. You got $1,400. I would have just took it right there. That's why I don't want to tell you to cut for a $200 loss right now. After where it just was earlier in the day.
Yeah, I'm definitely not cutting it. I did made around 3K from the same stock last week when it went up to 9. Because I bought at 426, and now I averaged down to 695. I did buy more 2,000 shares. I own 300 before I sold the previous ones, and I was just kind of greedy
So
about
you
making
took
more about it.
you secured 3,000 profit, you said?
Yeah, I did.
So essentially right now you're only down what, $2,800, or you're up $2,800 overall for the trade?
Yeah, just $200, and tomorrow I'm pretty sure it's gonna go up again until that I get that profit 1,400. But there's a lot of people saying that it could actually go up to 8 or 9 again, as a pull up. And I just wanted to ask if you think that could be true.
Yeah, I'd have to look at it more. Like I said, I don't have my Thinkorswim open right now, so I'm only looking at this on the charting and commands tab. But I would say, I mean, now that you said you made 3,000 profit on them before, I mean, you're still up $2,800 on that ticker altogether. But you're in shares. Obviously, you got to hold it till tomorrow, regardless. I would just see what they do tomorrow. If it gives you 1,400 profit again, I would definitely take it. Now you're up $4,400 on that one ticker alone. So I just wouldn't get greedy with it, even if people say it's going to pop up, to $9-10. I mean, even if it does, you won the trade. You made profit there. Worst case scenario is this thing comes right back down to say $4 or so. And now you might be overall with that 3,000 profit you made, you might have a net loss on the trade. That would be the worst case scenario. So
Right.
same thing, risk reward, you're up $2,800 net profit overall on that one ticker. So the only time you can lose is if it really tanks on you and you sell for a loss and you let those even that 3,000 profit go, and now you're just overall red on it. But yeah, see what they do tomorrow. I mean, you have to at this point, but best case scenario, hop out of that and take the profits if it gives them to you. Don't wait for it to push up to, $9 or so.
Tilly, I had
All right.
the same kind of question about laser.
Yep.
So like I'm down 10%. I have an equal amount in both regular laser stock and then the warrant stock. So I was wondering what you think is going to happen, I guess, towards the next few weeks with it.
So I do like where LAZR is right now, especially if you're not already in the trade. I'm still in those warrants. I mean, I'm down 10% as well on those 300 and some bucks. But to me, I'm holding these long, and I'm holding my LAZR shares long. I haven't bought the dip yet because when I mentioned, I think twice or so, that I averaged down on LAZR. I mean, hell, they were trading at $23 or so at that point. So I got a decent average. I think LAZR I'm in at $27, I want to say. LAZRW, whatever I mentioned in that tab, 1550 or so. But me, I'm holding those long term. But if you're trying to get in and out, if you don't want to hold them long term, did you get the LAZRW when I did?
I yes, I did the same day.
So I would have, if you didn't want to hold them long, I would have just taken the 25%. I don't know if you could because I don't know if you can trade pre-market. And I think they might have sold off that day. I mean, they were still at like $18 or so, so maybe like 15-20% at that point. But same thing that I said to him, if you're not planning, if you're just looking for, a quick share flip, um, LAZRW, if you got them when I did 25%, take that, get back out, get back in cheaper if you want. Um, Me personally, I would suggest if you don't need the funds, hold on to them for quite some time. I think it's going to be extremely rewarding. Um, LAZRW, you must have bought them near the peak, I take it.
Yeah, because I saw that's when you alerted it was like a big up day.
On LAZR, the normal one, right?
No, I meant on the warrants,
Oh,
but
sorry.
on
What's
laser, or I mean LAZR, the regular one, I got that when it was like 20 whatever, when you alerted that too.
so you picked up shares there at like 20 some bucks?
Yeah, and then I sold those, and then I got back in, I don't know, a few days later. But now I'm like down almost 8% with those.
Yeah, so I would still hold them. I wouldn't suggest taking the loss on them. Anytime you want to do that, you got in the lower 20s, you took profit. If you want to get back in, I mean this tool that we have here, that options fan bot and charting and commands tab. I mean, go to that and just pull up a simple yearly chart. Before you want to go back in. And you can't see it as good here on LAZR. But you can see it was pushing quite a bit outside that one Bollinger Band there. RSI completely oversold. Um, when you wanted to go back in, what I would have suggested was, to look at that mid band there, see how it bounced off the one time it sold off, whatever that short seller report was on them. That was the golden buy right there when I took that average. Um, I would have waited, look for it to do the same thing there, which would probably bring it to about $30 or so. Um, that's where I would have picked up that second round of shares and played another bounce off that.
So do you think that they're potentially going to come back down to 30?
I think 30 is where they would more than likely bounce unless, you get some more news as far as some selling on them, a short sell, which I mean we saw what happened last time. That thing did sell off fast. You know, a few days, but they bought that dip right back up, and I think that was in part aided by some Apple news there with them and whatever that other one is, VRTS or something like that. But I mean, you're in shares. I wouldn't sell those.
Like them too, so I think I'll hold on to them.
But if you absolutely need the money, you can always hop out of the trade if you want. But I always hate suggesting that with stocks, not options, but stocks that you own that I like.
Okay, thank you.
Yep.
Excuse me, Tillio. Can I ask a question?
Yeah.
I was wondering, what's your opinion on the ticker XL? If they were gonna go higher, or because I bought a call on it on going into March, I think, or February, that they're gonna be reaching out 30 call strike price.
Yeah, so that's another one. I mean, I haven't ever looked at this ticker until I just pulled it up in the commands tab right there. I've seen it talked about a lot, and obviously now I see why. It went from what, $20 to $33 or so, $35 in one day. So obviously that made social media, and people in here are probably talking about it. It looks like it's holding that upper band right now. But here's what I look at when I see these. So obviously there's news surrounding it, but I look at, from March till September, this thing was trading at $10, no volume whatsoever. Had a pop, came right back down, traded at $10. Had another pop. This time it didn't pull back down, made that large pop there. So you're going to see profit taking. You can see the decent sized red candles there after it reached that $35. So you're either going to drop right back down. If it's going to come down, I'd say it's probably going to come back to 20 bucks or so. But if this is an actually good company here, it needs to do that. Same thing with Nvidia and some of these other tickers we talked about earlier. It needs to find more buyers. No one wants to buy this thing at 35 bucks. I'm sure people did, but you gotta let this thing cool down a little bit. RSI was nearly at 90 bucks there, or 90. You need to let it cool down and it needs to find more buyers. So this is all, I mean, to me, it's, yeah, you see it trading at 10 bucks. I'm not saying it doesn't have potential there, but you see the bounces it makes comes right back down. So if I would have saw this when it made that huge bounce, I don't know if there's options on this or not, but I would have easily grabbed some puts there, just to sell against that momentum there, because I've seen it happen time and time again. All these kind of newer companies that finally took off, they have one big ass bounce and then they come right back down. You've seen it with LAZR, XL. I'm sure Neo did it years ago. But if you're in shares, or what are you in?
It was an options call, so for 4 months out.
What's the strike price on that?
30.
When did you get that?
I think a week ago. A week ago.
Now,
Because
were you in it?
I bought like a 15 call like 2 months ago on it. So I kind of I was like, oh crap, this popped, and I added another one when it went up a little bit at like 27, 28. I bought another one for a 30 call 4 months from now.
So did you hold those 15 strike calls, or did you sell them at some point?
I sold them at like 300% profit because they're expiring in 2 weeks. So
Okay, well, that was definitely smart there. And I take it you got those 30 strike calls while it was popping up there on that one day from 20 bucks to 35 bucks.
yeah,
Um, how much are you down on
I
those?
only bought one. I only bought one because I was thinking, because like a lot of the people were saying, our research was saying that it would reach 60. So I bought one 4 months out.
Well, that was definitely smart. How much are you down on those right now?
I don't know. Is it because the market is down? Because I feel like on my account, like I'm mostly red for today. I don't know why. I didn't even get into a lot of trades, but a lot of my swings and everything is red. And but now I'm down like 200 on it or something on the.
I would definitely hold it. I wouldn't even take an average right now with 4 months of time. But I mean, this is for any ticker. Just pull up a simple chart. Obviously, you got to be careful. I mean, I'm not saying this doesn't have potential here. Like I said, I know nothing about the company. I've never
Mhm.
looked into it, but I know when there's going to be a pump and dump. Not saying this is going to dump, but I mean, what I would consider what it did so far as a pump and dump, up to 35, back down to 26, 27 bucks right now. Um,
Right.
and that just, I mean, right now it's a crazy market that we live in. Social media can influence a lot of these tickers, and 9 times out of 10, you're gonna see it happen to a lot of these newer companies. That was usually traded on low volume. They're cheap to buy. So always be careful kind of chasing those. But like you said, you were in it a while ago, so obviously you knew something about it. What I would have just done is I would have spotted that, I don't know, what was it up that one day, almost 100%, that big move it made.
It went. I don't remember when I placed the call because it's been a while, but it was a January 15. January 15 for a $15 call. So
Well, I
it
mean,
went up by that.
even that one day, what was it, 1-2 last week at some point? It looks like it was almost up 100% for the day, like 19, 20 bucks, almost to 35
Yeah,
or
I
so.
think it reached up to 35. I think around there from
Yeah,
19, it
so
reached up to 35.
and that's one right there too. I mean, shit, I think we saw it with QS. QS, that might be the only example where that would be the only one.
What would you like me to convert?
That would be the only one I think where it, was up like 40%. It ran the next day, but anytime you see something like that up, almost 100% on the day, don't chase that. It's always going to pull back. 99% of the time it's going to pull back. So one thing I always like doing is, selling into strength, buying into weakness.
Yeah.
One good example right now that I'd be buying, I haven't started a position in it yet, but I'm going to. I'm just in some shares at 254, but that's BABA. So, extremely weak. I'm sure there's still some more bad news going to come out on them, but selling to strength, buying to weakness. So never buy into a company that's up, 100% for the day. Even though I'm sure you probably bought it the next day when it pulled back, or you bought it today at some point when it pulled back, but um, let it cool down a little bit first too. So, but
So,
yeah, I wouldn't do anything with those right now with the time you have.
okay, just one more. What about in 2 months? Like, what do you think? Like, from seeing the Excel chart, and what's your opinion for a 2 month in 2 months time? You think from 26 it'll go back up, or it'll just continue to go back down?
Well, something like this that I can tell is popping off in news. It's hard to say because obviously there's going to be more news coming out. But like I said, I wouldn't doubt this thing to come right back down to $20. Will it do that? They could release some news tomorrow, some positive news. It's going to spike right back up. Um, but that's where I would be eyeing it. About $20 right there.
Okay, thank
But
you
as
so much.
far as what it's going to do in 2 months, like I said, I'd have to be following the company. There's just not enough price history here to pull any kind of technical analysis out of it. At least what I'm just seeing on this simply laid out charting command here. But I'm sure they're going to have some more news. Is this a play on like EV or something like that? I take it.
Yeah, it's because it was, I think they bought PIV or Pivotal, and then that's when it sky that's the ticker I bought before a while back, like 2 months, a month
Okay.
back. Pivotal.
Well, I will
So
say it's probably the sector you want to be in, EV. The whole battery components as well. Um, Anything related to that. I mean, that's where we're heading in the future. Um, with a Biden administration coming in, obviously you want to look at some, solar, energy stuff like that. But it's about timing it. So it's buying it when it's not up a lot, filling into positions on some big down days. But I think this is going to be a pretty good sector to be into if you're not already. So I would always suggest, especially with some of these, starting out with some shares and just building into shares, especially if you can get them this cheap. I mean, these could be a couple $100 companies in due time down the road in the future.
Hey Tillio, because you mentioned Baba, I actually had gotten into some Jan 15, 242.50 calls today, and I missed my exit. It had gone. I got in at like 340. It went up to 450, and I thought it was going to squeeze some more. Missed the exit. Now it's down. Do you think that between now and the 15th, like you see some more positivity for Baba?
I do, but I also think I mean, there's still gonna be news coming out on them as far as everything going on there in China. Um, everything with Jack Ma, with Baba, with the Ant Group. Um, so I haven't built in. I mean, I think this was, a good time to build into, if not even on Thursday. Shit, I'd love to pick it up below $200 if I can, pick up some leaps on them or some, average down my shares. But it's hard to say. Like I said, you can't predict more news that's going to come out. It could go in Baba's favor. It can go in, obviously China's favor. But that's one reason, playing options on some of these China companies are not the safest thing to do. Especially something like Baba, where you got Jack Ma kind of going against everything that China wants to let happen. Capitalism and all that. So
Hmm.
you have time though. I think you might just need to take an average if it drops back below 220.
Okay. And
But
then
the
kind
only
of
thing
going to what we were talking about before, if we're not looking at percentages for a stop loss, if you're looking at more of like days out from expiration, like what would be your kind of stop there?
so with that one, 3 weeks of time, I would either stop out at 40%. I'd say, how much are you down right now?
Right now, I'm down 19%.
Yeah, so I would either stop out 40%, 50% if you want to be a little more conservative with it, or I would take an average down if you can get it this week, or real early next week at like 60 to 70%, take an average down on those. But those would be the levels I would be looking at 40 to 50% stop out, and just exit the trade completely, or let it bleed a little bit more, try and take an average no later than early next week, at 60 to 70%. The problem is you're going to have, I don't know what the price is there, maybe 232 or so. You're going to have some strong resistance right there now as you got that big gap to fill. And 240 is right in the middle of that.
Okay.
But that's what I'd be doing.
Appreciate that.
But I got to get going here. I got to get some food in me. I just wanted to, and I'm going to do these more often because I think they really need to be done. But really the main goal tonight was hopefully to help some of y'all out, especially new traders, or new members as far as entering trades, exiting trades, using stop losses, when to use them, having hedges. You hate to use them, you hate to spend the money on them, but you truly need them in this market. Uh, Not over trading, not putting a shit ton of your account into one trade because that could be one bad trade. Um, Not every single trade is going to hit. No one can hit 100% of their trades. So it's about longevity and consistent wins over time, offsetting those losses. Um, I'd be lying to say that you're going to come in here and hit 100% on every single one of your trades. That's just it's not going to happen. So you need to expect those losses to come. Um, if you go heavy into a losing trade, I mean that's what's going to blow up your account there, and that's why you just need to play small each and every time. Don't try and get rich overnight. Um, Never have more. I mean, no one here should ever have more than 5 to 7 open trades. Um, and if you do, like I said, you're going to have some of those trades. They're going to be in the green. Some of the other ones are going to be dragging down those profits. Don't take every single alert you see. Just because you see an alert, don't take it. Either wait. If it says, building into a position, chances are there's going to be a better entry. Take it then. Don't chase trades, especially if there's some of my scalps that are up 10, 15%. Cut losses. Don't wait for someone to say to cut losses here. A lot of times you'll see me suggest stop losses. Use them if you want. Don't if you don't want to. Don't let trades go, down 90% before you decide you want to stop out. Depending on the time, 40, 50%. Stop out if you have time. Either stop out or you take an average, maybe 50%, 60%. If you're scalping, usually you want to stop out of those trades quick because you can always just re-enter the trade, whether it be to the upside or to the downside, depending on what the setup is. If you're up good for the week, up good for the day, quit trading. Don't even gamble with those profits. If there's anything that's going to help you do this long term, it's taking profits, and not trying to rush your bank account. Just use it as some passive income. What else?
Can I ask you a quick question, really quick? I'm using Robinhood right now, and I was thinking about switching to TD, but I'm not sure if I should do it now because I'm all time, like I'm red all time. I don't know if I should just wait till I make my money back, or should I do it as soon as possible?
Well, I would at least take the time to set up a TD Ameritrade account if that's who you want to use. It'll maybe take you 15 minutes. Apply for standard options trading, cash account, just so it's all set up. Because you can still go on there, you can mess around, get used to the Thinkorswim platform or the TDA web and mobile platform as far as executing trades, practice some charting. So I think you should definitely set it up right now at least, and just get used to it because it is going to take time. I mean, Robinhood's the most user-friendly interface out of all the brokerages, and that's why they attract so many new traders. Just get used to it. It's gonna You might hate it at first just because it's new, but they have so many great tools, educational content, so much you can do with charting, looking at the fundamentals of companies, looking at the option chains and all the Greeks. There's a shit ton you can do with Thinkorswim. I mean, there's so many tools there that it's hard to even list them all. So that's definitely what I would do. Take the time, 15, 20 minutes, set it up tonight, and then just mess around with it for a little bit.
All right, should I try and make my losses back before I make a complete like transition over, or should I just like before? I mean, don't even worry about it. Just like start trading another.
What are you in right now?
Oh, I'm down about like 60%, like all time. I was really like greedy and stuff. I
What
lost.
plays do you currently have open?
Oh, I don't have too many. I have like I have that one PLTR play. I have just one contract of it. I was late today. So
Oh, you keep cutting out. Did you say you're only in PLTR?
yeah,
Is your entire account in that trade?
it's only one contract. It's I have it's for December 31st. It's $18.
All right. Well, I would just take, I mean, if you have cash available in Robinhood, I would just withdraw that to your bank account, and then just redeposit that into your TDA Ameritrade account.
Mhm.
I wouldn't do the whole brokerage kind of transaction thing there. I would just withdraw it, redeposit it. Um, I would just stay in that PLTR for now and maybe cut that in the morning, um, depending on what it looks like. But yeah, definitely take the time, set it up right now, get used to the platform, look at all the kind of tools they have there. They have a lot of educational tools you can use. Um, Customer service with TDA is real nice. You can call them up at any time, and any of their agents will be happy to help you and kind of point you in the right direction, especially as a new trader. Um, when it asked you for like your experience, just fib a little bit there. I didn't say that, but just lie a little bit, just so they approve you real fast, because it really is a great brokerage to use. I like them the most, I would say. I mean, people like Weeble, but it's really about what works for you.
Tillio, I had a quick question.
Yeah.
Do you plan on adding a channel about capital gains taxes so like everyone understands taxes from all their gains in the year, stuff like that?
Yeah, I think someone mentioned that. Maybe it was you, a week or two ago. I was talking to my financial advisor friend who's really knowledgeable in that. He's been in here a few times. So I'm just gonna have him either do a recorded live section like I'm doing right now for anyone that can be there, and then just post that recording. So I think it'll be a lot easier to follow him when he talks. Um, or I'll just create a general tax tab, I would think. But that is a good idea, because obviously a lot of people don't expect that. At the end of the year they could have some good gains. They withdraw that money, blow it all, and now they got a big tax burden at the end of the year. All right. Yeah, I mean, if we create a tab, if anything, I'm going to talk to him tonight and see if even just kind of a warm up for anyone that's available, hop in voice chat at some point before the new year here, just to kind of give a basic understanding on all of that. And then we'll even just add some content. Oh yeah, thank you for the suggestion there. That was a good one, Dimples. But all right. Yeah, I'm going to hop off here. I'll be in voice chat tomorrow probably. I'll try and get in there right when market opens. That's just where I like to take a lot of trades, and like I said, it's hard to help everyone out and try and find some good ones to take early morning volatility there. So going in tomorrow, you see profits, take them. Don't wait for any analyst, anyone to tell you to take profits. It's your money, it's your account. If you want to do it long term, then you can't rely on anyone. The alerts are there as suggestions to help you out with trades. You don't even have to take them. Go through the chart yourself, see if you like it, do your due diligence. Don't wait for them to say stop out of a trade. If you don't like it, if it's going against you, if you'd rather free up that cash and make the loss back on another trade, do that. Play with a small amount of your account. If you can't afford, if there's a trade that's your entire account, don't take it. Um, if What are some other little tips here? Yeah, if you take my trades, be able to take profits the same day. That's just how I work. If my strategy doesn't work for you, I mean, there's nothing wrong with not taking my trades if you can't day trade or anything like that, or you can't be here for the quick scalps. Taking profits, stop losses, those are really the most important. Longevity is kind of the goal here. Not going crazy with your account, not being in 20 open trades. There's no way you can manage all of them. Small account, maybe start with some shares. Check out the selling premium tab for credit spreads, stuff like that. Those are always good for small accounts. I'll try and hop back on here later as well to go over kind of following my watch list, but for the time being, go to my tab, go to the pinned messages section. There's one example there from 1218 on BA. I posted a good example there with a good description. What else here? If you get a contract that has months of time on it, don't worry the next day if it's red. If you're looking for a quick flip, then don't take a trade that has a couple months till expiration because they're not meant to be quick flips. That's QQQJ, for example. Next day people were asking me what to do when it's down $5. If I was expecting a good push out of that for a quick swing, I would have just went with a weekly expiration. What else? Not over trading. Don't take every single alert. Kind of be mindful of what you see in trade floor. Don't just, someone just says this stock's going to run. Don't just buy it because they say that. Get the hell off Robinhood if you want to be able to day trade. That's another important thing. Be careful swinging in this market. If you choose to swing, then the goal is to do it the right way. Build in positions. Don't go heavy on that first entry. Always start small into that initial position. One contract maybe. Leave room to average down. And when profits start to come, start trimming out. Don't just hold for 100% gains on that swing. Trim some at 10%, 20%, 50%. Build in and build out a position. That's really the right way you got to do swinging. If you see, say I were to post tomorrow a trade, and let's just say it's a BA call, it expires this Thursday. Don't just take that trade just because I alerted that. Think to yourself, okay, we're swinging this. We're going to need it to gap up in the morning for it to be worth what it is here at close. This is, considered a high risk trade. Don't take stuff like that. Know the risk involved. Know how theta works, day to day. Basically just, do your part as well. Don't just be a sheep here, see a trade and take it. Don't overtrade, stuff like that. So pretty much everything I've already repeated probably 10 times tonight so far. But I'm doing it for a reason, just because those are some of the issues I'm seeing. Don't expect every trade to be green. I said that 3 times as well tonight so far. That's really it. But like I said, I'm going to do some more of these lectures just because I think that we need to hear them every now and then to remind us. Like I said, trading to me is 80% psychological, 20% fundamental and technical. If your mind's not in the right place, there's no way you're going to do this long term. So you could be the best at reading charts, best at this and that, but if you get emotional, if you get greedy, it's never going to end well for you. So hopefully tonight helps a little bit. We'll eventually get this posted up. It'll be a long ass video, but for anyone that's not here, they can listen in on it. So I'm gonna go get some food on me. I'll be back in here later tonight.
Solid. Thanks, guys.
No problem. Thanks for everyone coming. It's only gonna help you out. So always pay attention if there's any live sessions, stuff like that. It's definitely a good time to join in, ask questions. The more knowledge you can gain, the better off it is for you long term. You can eventually do this stuff on your own. So come here, gain the knowledge you need, get the help you need, get a better understanding how options trading works, or just the market in general, and then get the hell out of here. Do it on your own. That should be the main goal for everyone here. So there's already been a lot of people that have done it. Came here, they might have been trading for a month at most. Came here, learned the things they didn't already know, and now they're doing this on their own. Whatever it is for them that works. What strategy works for them could be scalping. They could have just got good at following the watch list, and now they're making their own. So, and that's another thing. Don't sleep on any of the watch lists. Those, if there's never trades, I mean, you could take one ticker each day, and as long as there's some movement and not range bound, you can play any single ticker at least 5 times scalping it. So, like I said, go to the pinned messages section. There's one example there on BA. There's a few more buried in that pinned section tab, but eventually I'll put up some more examples and do some live sessions too on some trades we take. All right, everyone. Thanks for coming. So I'll be in voice chat tomorrow morning.
Thank you.